Hello, everyone. Thanks for joining me today. We are going to talk about tracking your profit margins during these holiday seasons. This holiday season, we're going to really dive into profit margins, understanding them deeply so you can maximize your earnings and make some informed decisions. Proverbs 21:5 says, "The plans of the diligent lead surely to abundance, but everyone who is hasty comes to only poverty." So today, let's equip you with practical strategies to diligently track your profit margins so that you are not only set up for holidays abundance, but also for long-term stability. My name is Jacob Curtis. I'm a CPA, a certified profit first professional, and a business coach. I started Curtis Accounting Solutions to remove the stress of doing the bookkeeping and payroll and taxes and to provide some practical business advice that really helps e-commerce stores piece together financial freedom. I'd love to hear your thoughts and questions on today's episode, so please leave a comment below and remember to like, share, follow, and subscribe. Okay, let's dive in. To track profit margins effectively, we need to understand what they mean for each layer of our business finances. So the first step is gross profit margin. Gross profit margin shows how much your revenue is left after covering cost of goods sold. For example, if your product sells for $50 and costs you $20 to make, your gross profit margin is 60%. That's 50 minus 20, that difference divided by $50. That's important to understand what that is. A gross profit margin is your selling price minus what it costs to sell that item. Number two is operating profit margin. This margin includes additional expenses like payroll and advertising and rent. If we add $15 in operating costs to the earlier product, this margin changes. Calculating it will help you understand your operational efficiencies. Now, net profit margin, this reflects your profit after expenses, all expenses, including taxes, after everything's been deducted. And knowing these different margins, you can see which area of your business is contributing most to your profitability. So understanding these help us identify where we can tweak operations or prices to boost profits during the holiday season. Goal setting is crucial for our holiday sales. Let's look at some practical steps. First, you want to define your target margins by product. Set your holiday profit margin target for each product type. If you usually aim for a 60% gross profit margin, consider increasing it for high demand items during the holiday season. Number two is your break-even analysis. Calculate your break-even to ensure your sales are profitable. For example, if your total fixed costs are $10,000 and your product has a margin of $50, you will need to sell 200 units to break even. Knowing this break-even number can really guide your discounting decisions. Number three is set realistic revenue goals. Based on previous year's data, forecast sales, and adjusted prices to achieve those targets while maintaining the margins. Holiday discounts attract buyers, but we need to track how they impact margins. First, we need to calculate the impact. If a $50 item is discounted by 20%, the price drops to $40. Impacting your gross profit margin. Previously, at $50 with a $20 cost, the margin was 60%. With being discounted down to $40, that margin decreases to only 50%. We want to strategize about your discounts. Focus on higher discounts on products with higher margins. For example, if product A has a 70% margin and product B has a 50% margin, offering a larger discount on product A may better preserve overall profitability. Now, sometimes smaller discounts on high demand items bring in higher profits than larger discounts on lower margin products. So track your sales daily to see which promotions drive those profits versus just high sales volumes. Understanding your exact cost per unit helps keep holiday sales profitable. Break down costs as much as you can. Include production, packaging, shipping, and holiday-specific costs like seasonal wrapping. If your standard cost per unit is $20, but your holiday packaging adds an additional $3 and expedited shipping adds an additional $2, that cost per unit rises to $25. Anticipate these extra expenses that can sneak up during the holiday rush and factor these into your pricing. Calculate and adjust your margins as needed. If you're selling $25 products for $40, your new gross margin is 37.5%. Compare this to the original margin to see if your pricing is sufficient for the holiday season. Now, real-time monitoring allows for quick decisions that protect your profit margins. So use your dashboards. Shopify and other platforms offer dashboards where you can track sales and margin data as it happens. Set daily alerts if possible to get a quick view of top selling products and their profitability. You want to track these daily. If a particular product is selling fast but has a lower than expected margin, you might decide to reduce the discount or bundle it with a higher margin item to preserve that profit. And again, you may want to adjust mid-sale. Let's say you plan for a 20% discount, but after monitoring, you see that a 15% discount achieves the same volume. Adjusting the discount preserves your margins while still meeting sales goals. Inventory is a balancing act during the holiday season. Prioritize high-margin products. Focus on items that have strong margins. If you have one product with a 70% margin and another product with a 40% margin, allocate more inventory budget to the 70% item. Avoid overstocking those low-margin items. These might be tempting to discount heavily, but you risk leftover stock post-season. Limit your stock of lower-margin items and bundle or upsell them when possible. Use real-time inventory alerts. Again, set up those alerts when stock levels drop for high-demand products to restock quickly and avoid missed sales. Operational costs can also rise fast during the holidays, so controlling them is crucial. Seasonal labor costs can sneak up on you. If you are hiring extra staff, track their costs against revenue. Let's say for each additional staff member costs you $15 an hour. Calculate how much they're adding to each unit's cost to ensure profitability. Now, if you have multiple units, you can just do an average of that. Number 2 is look at your shipping costs. Do an analysis. Compare multiple shipping providers or offer tiered shipping options to manage those costs. For example, free shipping might increase conversions, but a minimum order threshold can offset that cost. If your usual cost per unit is $25, but with holiday labor and shipping, raise it to maybe $30 to help cover some of those additional costs. You'll want to raise that price or cut expenses elsewhere to keep your margins intact. Once the holiday season ends, it's time for reflection. Analyze your profits by product. Look at each product sector, which one's brought in the highest margins. If product A had a 60% margin while product B had a 35% margin, this insight helps plan for next season's inventory and discount strategy. Review the discount's effectiveness. Track how different discounts impacted margins and overall sales. For instance, there's a 15% discount on one item, you'll have higher profits than a 20% discount on another. Plan for improvement. Use these insights to prepare for next season and the next coming months, refining your inventory levels, discounts, and staffing to increase your profitability. Profit tracking software can simplify your holiday accounting. Automate with tools. Many e-commerce platforms offer integrations with tools to automatically track profits and margins in real time. For example, QuickBooks and Shopify can integrate there. Also, Shopify has built-in reports to easily monitor and view. Look at your software options. Use software that allows custom tracking for margins, discount effectiveness, and cost per unit. This provides insights without manual calculations. And then finally, the real-time benefits. Immediate data means quick decisions. If a product's margin drops, you can decide right away to pause discounts or reduce restocks. Another effective method is using profit first during the holidays to help keep finances organized and support your long-term growth. Allocate strategically. For every sale, allocate your funds to your profit account, owner's pay account, tax, operating, inventory accounts. For example, if you had $1,000 in profit, you're going to allocate a percentage of those to each of those accounts, the profit account, the owner's pay account, and the tax account. Finally, you want to reinforce those goals. By sticking to profit first in those allocations, you avoid spending all of those holiday profits immediately, and you can build a reserve and help with the long-term growth of the business. And finally, there's going to be some structured success with profit first. This discipline ensures that after that busy season, your business remains financially sound and prepared for slower periods. Tracking your profit margins throughout the season pays off with actionable insights for next year and the coming months. Document what works. Did certain products outperform others? Was there a specific discount effective or marketing strategy? Write it down to plan smarter and better for next year. As far as inventory marketing goes, use sales data to plan next year's inventory and use your open to buy kind of process to help figure out what inventory levels need to be. And look at the marketing strategy. What marketing worked, which one didn't, allowing you to really maximize profit from the start. Celebrate the wins. Recognize the hard work that you've put into having a successful holiday season. Knowing each lesson learned builds a more profitable future. So if you have any questions or need assistance with managing your company's finances, don't hesitate to reach out to me. I'm here to help you piece together financial freedom. Schedule a call with me to get started by scanning the QR code on the screen, or go to jacobcurtiscpa.com/5-strategies-calendar to get started. You could also click the link in the first pinned comment below. And remember to follow me, Jacob Curtis CPA and Curtis Accounting Solutions, on Facebook, Instagram, Pinterest, and YouTube. Thanks for watching, and we'll talk to you soon.